Okay, welcome back to the channel, guys. Now we want to look into the story of price on gold. This is gold, so we want to look from the daily time frame. We can see that price has been bullish on the daily time frame. It has been buying, making series of higher highs and higher lows, and then this highs was taking and it has been bullish. Okay, and this is the fourth quarter of the year. The price is always bullish, is always trending at the fourth um, quarter of the year. So what can we see, guys? After this last break of structure here we had here, you will be expecting that price should return to the last candle before we add this push, which is this order block, but price never returned to it, and we've been having other internal break of structures like we had here. We have a break of structure here, we have another one here. Okay, we have another break of structure here, and then price returned into the bullish order block, yes, that was mitigated. Now we had this break of structure also, and price never returned into the order block or the demand zone. Price never returned into it, so that's good for you, so we have another break of structure. Price didn't return to it. We have this break of structure also, and price didn't return. This is the recent break of structure we had, and that was this week. So you just go down to the 4-hour time frame. Under this 4-hour time frame, there are things you will be seeing price do which you can't see in the higher time frame. You can't see that in the higher time frame, so you have to go from time frame to time frame to get your entries. So we add this break of structure on the daily. Right, on the daily. And what did we see? We saw price returned to the last candle before that break of structure. You see that? You see how price returned to it and what? Bought all the way up. So after this break of structure we had here, price didn't come back into any of the order block here, because this should have been the order block, but price returned back into it. With this candlestick returned to mitigate this order block. So this order block has been mitigated. Now, after this break of structure, we have this order block here. This doji candlestick here, you can find here, is this doji candle here is an order block. The price will most likely return back into, and of course that was what he did. He came back into it, mitigated it, and pushed to the upside using this low here as a liquidity, because people want to be buying from this other doji candle stick we have here. So we add this break of structure. So you just follow the story that price is telling. Okay, no pressure. So we had, after this break of structure we had here, now we saw price came into the fair value gap, here. Okay, came into this fair value gap here and continued all the way up. Now we add another break of structure. It's just break of structure, go back to your demand. Break of structure, look for your demand. Now after this break of structure, what did we see? Price came back into this demand zone. We are following the story of price, and boom, to the upside. We had this break of structure also, and this is a zone that should have been mitigated, but price didn't come back into it. Now we saw this rally. This happened on Monday. We saw this rally on Monday. So now price took out this, broke this structure here, broke this structure here, and what happened? It returned. Remember, this is a 4 hour time frame. Under this 4 hour time frame, you can still scale down lower to get entries. So we add this zone. This was yesterday. We had this downward push. Was it yesterday? Okay, that was last week. Yes, that was last week. So we had this downward push to mitigate this demand zone, and we saw our price pushed all the way up throughout last week, created a new high, pushed all the way up, and then this is the last break of structure, or the recent break of structure we are now having. This is it. This is what we are having. Now when you scale down to the lower time frame, let's see what the 1 hour time frame is saying. You will see things clearer from this time frame. So now if you look at this break of structure that we had here, we had this break of structure here. Okay, we had this break of structure, and where is the candle? You can refine this candle, because taking your entry from the 4 hour time frame is going to be large. Your stop loss is going to be large, so you can have your zone refined. So we refined this zone and we got an entry here. Okay, and here was, as of last week, here was our buy side liquidity, because we have equal highs here. This is what retail traders call double top. Okay, double top. Now this double top is a liquidity in price. Price will come to take it out. So this was our buy side liquidity as of last week. We are expecting price to take it, but now internally we add internal break of structures here. We had this internal break of structure, and price did return to the last candle that caused that break of structure. This is it. Price tapped into it, broke the structure here again. When you go to your lower time frame, you see that though on the 1 hour it was a weak, but on the 15 minutes you will see it as a clear break of structure. And what happened? Price came back into the last candlestick before the break of structure, which is this. If you go down to the lower time frame, you will still see a way of refining that zone. Okay, so we add this testing here, we add this break of structure, here, and then price came back into this candle. This is it, and this is our protected low. Tapped into it, and what happened? It moved again and took out this high. So you just know this is your trend, and you follow the trend. Okay, we saw price pushing up, came back down, created this other block. This is another block that was created. This is the last candlestick before that internal structure was taken, and then price came back and almost tapped it and pushed up again. Now after pushing up to the upside, what happened? This happened, I think this was Friday into Sunday opening. I saw this trade, and I was expecting, okay, probably price should return to this candlestick here, this one here, but no, it was this old candlestick price retested. You know, this is a doji candle. So price retested this and started scaling to the upside. You see that price started scaling to the upside, just following the trend. Okay, now we add this break of structure. We add this break of structure here, and what happened? Price came back into this fair value gap. All of this, you can go down to the 5 minutes, you will see entries in all of this. This is fair value gap entry. Price came back into this fair value gap, pushed all the way up, came back to test this candlestick, and then we broke this structure. This is the candlestick, the last candlestick before this break of structure, but no, price only retested the fair value gap. Price retested this fair value gap here and then pushed to the upside. So we add this fair value gap retested. Now after that, what did we see? We saw break of structure again, and price was just chubby around here, and then came back into this candle, this last candle before we add that little break of structure. I know so many people will be looking for sales here, but then price was still pushing up because from the daily we have a buy side liquidity that have not yet been cleared. So this is another break of structure here, and then this is our last candlestick before that move. Okay, so this, you continue to do the same thing over and over again, provided that your trend is still intact. So we add this break of structure here, and then price returned back into this this other block, returned into it, and then we pushed all the way up. Now price came and retested the fair value gap, filled the imbalance, and pushed to the upside. Sorry, that's the fair value gap. So, and pushed to the upside and pushed to the upside. So this is what we keep seeing the price, the market do over and over again. We saw this break of structure. So when you get your narrative from the higher time frame that price is bullish, you get your zone, your break of structure. If you can locate your break of structure on maybe the hourly time frame, look for your order block, come back to your 15 minutes to get your order block refined so that you can find your entry, because we take our entry from the 15 minutes or the 5 minutes order block, okay, or demand zone. Now this zone is a clear zone. You'll see that price came back and cleared this zone. Yes, that's why you give room for your stop loss. This is more like this is the first touch, then this is another touch, this is another touch. This is like a relatively equal highs, okay, low rather, relatively equal low. Either you pick the three of them or these two, they are relatively equal, and that is a liquidity in price. So price will definitely come and clear it out, and that was what happened. We add that sweep of liquidity here, and price immediately pushed to the upside. Price immediately pushed to the upside. Now what next did we see? We saw this high taken, and that was a break of structure for us there. That was a break of structure for us there. Now what did price do? Price came back to this demand zone. This is the demand zone we had, and price came back into it, in fact even cleared it. You know, there's something that price does. Let me say, there's something that price does. If price is bullish, you see price doing things like this, comes back down to an order block, break structure, clear this liquidity to the downside, Now you continue to push up higher. Now push up to the upside. Expectedly, you are supposed to start buying from a demand zone around here. What will price? The price will take out this side. That is liquidity for you. It will push up high, create a liquidity again, now break structure again, and come back to take this low, sweep this low again, and then continue to the upside. So that is what price does. Okay, let me explain that again. Let's make this a line. Now price pushed to the upside, came back to an order block here, came back into an order block that is around here. Okay, now break structure here, break this structure to this upside. Expectedly, you should have an order block here. The price will come to mitigate. You will now see price come, take out the low, which is expected to be a protected low. Now we take out this low, and then and then sweep the low and start buying all the way up again. So when you have this understanding of liquidity in price, and possibly there might be another order block around here, the price will come to mitigate. So it will come to mitigate it using this guy as an inducement in price. So it will now use this as an inducement for price to push to the upside. So this becomes your inducement. This becomes your inducement liquidity. This becomes your inducement liquidity. Now you have the same thing after this break of structure here. Now you have this break of structure here. Okay, you have this break of structure here, but now this is the last candlestick around here. We have the last candlestick that broke that structure. Okay, but there is a lower demand zone somewhere around here. There is a lower demand zone somewhere around here. Do not take your trades from here. Do not take your trades from here. Just know that the price will use this zone as an inducement liquidity. It will use this zone as an inducement liquidity. So you wait for it. You wait for it. Maybe subsequently I'm going to create a video on inducement liquidity. The same thing happens over and over again. So we have this break of structure here, and now expectedly you should be taking this last candlestick before the break of structure as your what? As your order block. But no, price will come back and take this low as its inducement liquidity, and then mitigate a lower order block or demand zone to push price higher. So this is exactly what happened. This is exactly what happened on our chart here. So we add this break of structure. We add this break of structure, and expectedly this should be our what? Our demand zone. And what happened? Price cleared it. Price cleared the liquidity just the same way it did here. This is our demand zone here. Price cleared it here and pushed price to the upside. Now this is our demand zone again. Price came all the way down and what? Pushed to the upside. So this price action happened yesterday, and I got an entry. I got an entry. We had this push to the ups after this massive dump from the top here, this new high that was created. Now we add this dump to the downside, and price, what did price do? If you go down to the 5 minutes, you will see a sweep of liquidity on the 5 minutes. You will see a sweep of liquidity on the 5 minutes. This is it. This is a 5 minute time frame. We had a sweep of liquidity here. We had a sweep of liquidity. Very tiny, okay? Let's take this out. Very tiny sweep of liquidity. Now, you will mark the last eye before we add that sweep of liquidity, which is this candle eye here. Okay? This candle eye here. That's market structure shift. So, now, expectedly you should be taking this last candle before that break of structure happened as your what? As your demand zone. Now, what did price do? After a long while, it came and swept it. That is the sweep of liquidity, inducement liquidity I just talked about here now. Okay, that's the inducement liquidity I just talked about. But now we have this last order block, this candle, this doji candle, and we have a fair value gap that have not yet been mitigated. Now, what did price do? Price came into the fair value gap here, into the order block rather, and used this candlestick, which we would have used as our order block, as inducement liquidity. As inducement liquidity. So somebody can be taking buys from here, taking your buys from this candle open, and say, okay, my stop loss is under this low, and the person will be taking out. See, the person would have been taking out. But having an understanding of inducement liquidity, you now what? You see that zone as an inducement and take your entry from this and have your protected low here and you're targeting the all-time highs. Okay, the all-time high is our target. This is it. So that is it. Now, I couldn't get an entry. Okay, if that is your case, couldn't get an entry from this top. What happened? Follow the story of price. Follow the story of price. What did we see internally? We saw this break of structure, this internal break of structure here, and after that break of structure, what did price do? We mark our what? We mark our order block. Just mark your order block and set your entry. Price came back into it. So if you had missed this first entry, you would have gotten a second entry here, and then still put your stop loss below that zone. Now, what we are still targeting is this high. Okay, now we are on this trade. When we got another break of structure, this is another break of structure, and what happened? Price came back down into the order block here, came back into this candlestick here, which is the order block, tested it and still pushed all the way up. Now we have another break of structure here. What did price do? Came back into the last candlestick. This is it, this doji candle, and then mitigated it and pushed all the way up. We had another break of structure. So you would have been getting more entries. This is first entry, this second entry, this third entry, this is a fourth entry now. Now we have this break of structure. Okay, this was the entry I took last night before going to bed. Now, price was around here. I spotted this break of structure and I saw price consolidating around here. I saw this demand zone after that break of structure. I saw this demand zone. It was a sniper, guys. Now, I knew this was going to be my liquidity. This was going to be my liquidity. We had our fair value gap. We had our liquidity. We have our demand zone. And now, the moment I saw this, I just set my limit. I set my limit here. I set my limit here, my stop loss below that zone, and then I targeted this high, which is our full TP. And I woke up this morning to see trade hit TP. Okay, guys. So, but let's finish our story telling. Now we add this break of structure. We add this break of structure. Okay, and after this break of structure, what happened? Price, we have this as our demand zone. Price has not come back into it. Price only came into the fair value gap, and pushed all the way up, and then we saw another break of structure, and price returned into this order block, the last candle before the break of structure. We also had this break of structure, After this break of structure, what did we have? We have this demand zone. So price did not return into it, even though this this is where we are. We saw this massive push to the downside. I was expecting that price will get into this order block, okay, get into this order block. But what did price do? Maybe if, let's see, in our 15 minutes. Okay, so in our 15 minutes, this is an order block, and that was what price came to test. So price came in to test it on our 15 minutes. Now using this low as our liquidity. So that is why as you do your analysis, you go from time frame to time frame. So we add that. This is another break of structure here. Then we add break of structure, price returned into this zone, okay. We add this break of structure again, and then price pushed to this upside. So this is where price is this morning. For me, this is not a change of trend, okay? This is not a change of trend. So we had price tap into this demand zone, and it's possible price will be coming to the upside. So I'm not seeing this as a change of trend, because this is the last. We add this break of structure. Okay. We add this break of structure, and we also add this tiny break of structure. So expectedly, we want to see a closure below this last low with a candlestick, not a wick, for us to confirm that this is a market structure shift. Okay, so but we do not have a close below with a candle, we just have it with a wick. So I wouldn't be engaging in anything called sell. Of course, this is a buy zone that is mitigated, okay, so I wouldn't be engaging in anything called sell until we have a clear break below that zone. So but then we can still have something like price coming into this zone here. This is our supply zone. So price can decide to come into this zone and then sell all the way down, because under this wick we have a lot of liquidity here. A lot of liquidity are packed under this wick here, because reason is because this is a demand zone that price came to tap in and immediately moved away from this zone. So many people that will be buying, so many people might be buying from this zone here. They have their stop loss under this zone, so there is liquidity on this stop loss here, okay. There's liquidity on this stop loss, and they will be targeting this all-time high to take their profit. Now this is what price will do. After price have moved, a lot of them would have broken even. They would have moved their stop loss to break even. So that means there are liquidity under this zone here. Now they will break even. Some might not even break even. Price can decide to come here and trigger a sell from this zone, having stop loss above this high, and then come to take out this their liquidity. After taking out this liquidity here, okay, after taking out this liquidity here, price will now continue the bullish move again. Remember, I talked about inducement liquidity. Okay, so price will just came back, trigger this guy as an inducement of price, and then push to the upside. So this is the story price tells. If you learn to follow the story of price and don't try to tell your own story, just follow it as price gives you the opportunity, you follow it. You know, this demand zone is not yet mitigated. This demand zone is not yet mitigated. So we can have that sell into this zone here, and then price will decide to push again to the upside. So this is price for you. Okay, so that's where we are going to end this class. If you are new to this channel, do well to hit on the subscribe button and turn on the notification bell. Like this video if it has actually added value to you, and share. Thank you very much.